We will be announcing more programming in the coming weeks, so please visit apap365.org/programs for more information on upcoming programming. And so now let's get started. We have an amazing panel today to go through the intricacies of US and Canadian artist taxes. And I want to just introduce the panel here. First is our partner at Tamizdat, and this has been a great initial series for us working with APAP to find new ways of getting up-to-date visa, artists, and tax information to our members. And we are so proud and excited to be working with Tamizdat and the team there, including Matthew Covey and Boo Frebel. Matthew is the executive director of Tamizdat. Has devoted his professional career to helping artists build bridges between international communities. And he will be able to share more about all of the things that he's done, but it's a lot, and we're so happy that he's here. Joining us on the panel includes Lee Cohen. Lee Cohen is a 25+ year music industry professional focusing on business management and non-resident tax withholding. For the past 10 years, Lee acted as a CWA withholding agent, executing 100+ contracts with the IRS to reduce artist tax withholding. And Lee started working in music at the age of 15 and has worked in the music industry and for a while. And he holds an MBA from University of Glasgow in Scotland. He's also operates as a sole trader business manager and CWA withholding agent. Terry Clark is a longtime artistic director of Calgary Folk Music Festival. And she programs the 44-year post-folk Calgary Folk Music Festival, block heater, and an off-season concert series, all of which include many international, non-Canadian artists. She is a key member of RAD, or the Canadian Artistic Director Collective, and North American Presenters Plus co-founded Rwanda's Kigali Up Festival. She's helped book and coordinate the Canadian tours of several international artists over the years, so is well-versed in the fun stuff, logistics and regulations, particularly around immigration and tax laws. And certainly, last but not least, is Shauna Cooper. As an independent music industry professional, Shauna is an artist manager, agent, and project manager. She has worked internationally at festivals and events, and for several Canadian festivals. Focused on supporting non-Canadian artists touring in Canada, Shauna has a lot of experience with many logistical aspects of touring in Canada, including tax and immigration issues and such. Shauna completed a certificate in entertainment law, and she's a member of various organizations, including AMA, FAI, the Recording Academy, and CARIS. So welcome to the panel. So glad that you're here. I'm going to turn things over to Matthew Covey to lead us in this conversation. Matthew?
Thank you so much, Krista. And also thank you to APAP for letting us do this. This is the third in a series. The first two were about immigration. I had a lot to say. This one's about taxes, and I just really don't know. I mean, I just don't. I'd like to not think about that as much as possible. So I'm really glad that you're all here, that my other panelists are here, so I can just ask questions and not pretend like I know what I'm doing. The structure today is going to be pretty loose and pretty informal. It's a small group. And so what we're going to do is Lee is going to talk for 15, 20 minutes about kind of a 101 about US taxes for international artists coming to the US, touching on central withholding agreements, developments in those in the last few years. Then Carrie and Shauna have worked out some way to tag team about talking about Canadian issues. I'm not quite sure how they're going to do that, but I know that they will do an exemplary job for 15, 20 minutes. And then I will just open it up to questions and conversations. I already had to sort of curtail a conversation between Lee and Carrie and Shauna before the session because they started going into a pretty deep dive into details about how all this works and the interrelationships between Canadian law and US law, and oh, good Lord, I don't know where that was going, but we'll get into that later, and obviously we really welcome the audience to dive into that, because looking at the people I know who are in the audience, and I know quite a few of you, you're going to have a lot of interesting questions here. There's some people who have a lot of experience here as well. So I look forward to that, and I don't want to take up any more time because I'm sure we'll run out at the end. So sorry, I should have introduced myself. Krista, you already had introduced me largely, but I'm Matthew Covey. I'm the executive director of Tamizdat, a nonprofit that promotes international cultural exchange, working a lot in the realm of immigration, impediments to culture. I am a middle-aged white man with a beard and a black t-shirt. And with that, like to hand it over to Lee. Lee, do you want to take it away and give us the lowdown?
I'm Lee Cohen. I'm a business manager and CWA withholding agent. Let's see, I am also a middle-aged white Jewish male. My pronouns are he, him. It's the first time I've ever had to do this kind of introduction. Oh, I'm wearing a blue and white checkered shirt, and I have glasses and gray hair, lots of gray hair. Okay, so I'm going to talk about non-resident artists who want to perform in the US and how the IRS, the US tax authority, requires withholding, and how you can mitigate that withholding by applying for a CWA, a central withholding agreement. I've got a bunch of slides, so I'm going to put those up if I can share. There we go. Let's see. Is that working? Am I sharing the whole thing? Sorry, there's like a function here, so you just slideshow, right? That's what I want to do. Maybe not. There we go, right?
Yep, you got it. Play from the start.
So you just seen, okay, so this is the first slide, right? Sorry, it's been a while since my MBA where I had to do this. Some basic facts about US taxation, withholding, and central withholding agreements. The first is that the IRS requires 30% withholding on gross income paid to non-resident artists, entertainers. Meaning, if your artist comes to the States and the gross income guarantee on a show is $100,000, 30% withholding is required on that show unless you have a CWA. But promoters are required to withhold it. If they don't withhold it and the money is passed through to an agency, the agency is required to withhold it. If nobody withholds it, well, that was their responsibility. We'll deal with that later. The only way to reduce that 30% withholding is by applying for a CWA, a central withholding agreement. This is a contract between the IRS, the artist, and a third party that acts as the withholding agent. That's my responsibility, or can be the responsibility of any third party that has a social security number that operates independently from the artist. Third fact, if you perform in the US, you must file a tax return. You must file even if you have $0 earned or lose money on your tour. You, of course, could not file, but if you want to be eligible for the CWA in years where you start making money, you need to file for prior years. If you had 30% withholding and you don't file, 30% is not the actual tax that's due. The tax that's due is figured on the tax return. 30% is just a number the IRS used to hold on to a chunk of money so that you file your tax return correctly. And if you don't file your tax return, after a couple of years, they're going to keep that money, that 30%, and you can't get it back if you're due any of the balance. So let's see, this is what I'm going to cover. Whoops. Here's what I'm going to cover. What is the CWA? How does the CWA affect the 30% withholding? How do you file? What are the benefits, the requirements, the responsibilities as a non-resident taxpayer in the US, what happens if you don't have a CWA, common misconceptions, and the definition of a beneficial earner as to who gets taxed. So CWA is short for Central Withholding Agreement. It's a contract between the artist, the IRS, and a third party designated withholding agent. It's truly a contract. It's a 10-page document that the IRS issue that you sign off on, or the artist signs off on, the IRS sign off on, and the withholding agent sign off on, and they're all tied together to the requirements of the CWA, which are producing final accounting, giving the IRS agent that's assigned to the CWA contract and case all the evidence that they need to help reduce the tax withholding. The CWA is the only means by which you can legitimately reduce your US tax withholding from 30% of the gross income to the relative tax rate on net income. I'll go into this a little bit later. Everybody tries to find a workaround. Everybody thinks, oh, I'll just start a US-based LLC and that will take care of it. Oh, I'll just have them pay my manager who's based in the US, and therefore they're paying a US person, and I am from a foreign country, but because it was paid to a US person, the tax will go away. And some promoters would be fooled by that, but it's not correct, and you're not going to get away with it forever. And you're going to feasibly make it difficult for yourself in future years if you want to go legitimate and file for CWAs. Important, a CWA is not a tax return. CWA is just a way to mitigate the 30% withholding during the tax year. You still have to file a tax return. The tax return allows for some additional deductions. So even if you've done a CWA and you had reduced withholding, chances are you're going to have additional refund due to you once you file your tax return. So again, it's another incentive for you to file the tax return. And so you're not confused by matters. The CWA is just not a tax return. The tax return is filed at the end of the year in the new year. How does the CWA affect the 30% withholding? So if you don't have a CWA, the IRS is going to withhold 30% of your gross income. If you do have the CWA, the IRS is going to consider all of your expenses to offset the gross income and then apply an estimated withholding on the net income. So if you have 100,000 gross and no CWA, they're going to withhold 30%. They're going to hold on to $30,000. If you have $100K gross income and a CWA in place, and you have $90K of expenses, your net's only $10K. They're only going to withhold 10% tax on that 10K. 10% tax is the relative tax rate on 10K for the tax year, right? So by doing the CWA, you're going to be paying about $1,000 in tax in withholding, as opposed to not doing the CWA, where you're going to have $30,000 in withholding. So you're essentially freeing up $29,000 in cash flow by having a CWA in place. As the tours grow bigger, that 30% grows more and more and more. So I work with a lot of artists where the difference between non-CWA and CWA is hundreds of thousands of dollars. So it really behooves artists who come to the States to keep it together, file your taxes, and be CWA eligible and apply for CWAs. Tax rates are relative in the States. So the more you earn, the more tax is withheld. It's not a flat rate at all levels of income. So if you earn, they have it up here, if you earn 10K in a tax year, it's going to be 10%. If you earn 75K, It's 16% on that 75K. And that's the net income. So you're taxed on net income, which is on your tax return. As I said here, the total tax due is a single calculation based on the total adjusted net income as filed on your tax return, not the CWA. The CWA is just withholding. It's just a mechanism by which the IRS hold onto a chunk of money to make sure that you file your tax return. And in many cases, it's a way for the IRS to hold on to your money. A lot of people don't file. How do you file for a CWA? So you can't, as an artist, file on your own. You must appoint a designated withholding agent. If you have a manager, and the manager is based in the US, and they have a social security number, excuse me, the pollen's really bad here. That manager as a representative for themselves, essentially, because they're going to file as an individual separate from the artist, can act as the CWA withholding agent. In fact, me saying I'm a CWA withholding agent is just a matter of me doing that role. There's no like license to do this. It's just a matter of me entering into the contract and being designated the withholding agent by the IRS. Without the CWA, all of your promoters are your designated withholding agent for the income from those shows. When I file the CWA and I become the designated withholding agent, all the promoters are absolved of their responsibility for withholding, and everything goes through me, the singles withholding agent, for all of the shows listed on the CWA contract. So that should be all the shows on your tour. So anyone with a US tax ID can represent the artist as a withholding agent, but the artist or any individual applicants on the CWA cannot do this for themselves. It has to be a third party. The CWA is filed with form 13930. At the end of my slides, I have a link to that application. If you choose to go it alone and have representative file it for you, all good. There's instructions on how to do it. There's frequently asked questions. It's perilous. I don't recommend it. Hire somebody to do it. Let's see. So what are the benefits? The obvious benefit is the reduction of 30% withholding. As I mentioned, like, I save hundreds of thousands of dollars in withholding for people. Artists oftentimes need that to float their expenses. I work with some big bands right now, but I also work with small bands who are coming over for the first time, and 30% withholding is, you know, sometimes more than they're going to make without it. So they really need the CWA, otherwise they're going to go into the red on a tour. And they really don't necessarily owe that money, because when you do the tax return, you figure out the tax based on the net, and the net might be zero or just a little bit more than zero. All that withholding is going to come back. So you're really like tying up cash flow if you don't have a CWA. And it's really detrimental to smaller artists because they need that money more, obviously. At the same time, when you have a CWA, I become the singular withholding agent, or wherever you designate as withholding agent in the contract becomes the singular withholding agent for all of the shows on the tour. If you don't have that, then you have to rely on every single promoter to withhold, to pay that withholding to the IRS, to properly file forms with the IRS to apportion all of their withholding that they've reported during the tax year. And then they have to give you forms that you use with your tax return to claim the money that they paid to the IRS and apportioned to you. And I promise you, they all screw this up. It is painful. And incorrect filed forms or unfiled forms or unpaid withholding can tie up a refund. I'll put it this way. I'm working on a 2015 tax return still and a refund that's due. What year? We're 8 years later now. It's still going on because of forms that were incorrectly filed. And at the same time, some promoters withhold and then they accidentally don't pay the withholding. Well, if they don't pay the withholding to the IRS, and you have nothing to claim for income that was not paid to you. So there's nothing to get back from the IRS. So then you have to go back and chase the promoter for that money. It happens more than you think. Smaller promoters are maybe not as good at this. When you work with a Live Nation or an AEG, you're going to get handled. But even those forms are tricky because when you work with a bigger agent, with a bigger promoter in the States that has done multiple shows and there's multiple withholdings and they're consolidating them to one form, they're still relying on promoter information from those different shows and it gets mixed up. So the real benefit of the CWA, other than 30%, is you get one form for all your withholding, not 15 to 20 to 30 forms, depending on how many shows you did. So again, benefit to the CWA. Sorry, did I miss something there? Promoters always get this wrong. They really, really do. So fair warning. So your responsibilities as a non-resident artist coming to the States, the CWA is an estimate of withholding. You still have to file a tax return by June 15th of the following year. So if you're touring now, or you're touring in the fall of this year, 2023, the non-resident tax return deadline is June 15th. You can extend that to October 15th. You can then extend October 15th to December 15th. If you are due a refund, as soon as you have forms 1042S, which is the withholding forms for the prior tax year, you can file your taxes and claim back any refund that's due. So typically, a U.S. tax return for non-residents produces a refund. I say this because there are deductions on the tax return that you can't claim during the tax year on the CWA. So the most obvious is something called the qualified business income deduction. So when you file a tax return, there's a certain point in the tax return where you calculate an additional 20% reduction to your net income. That's just a standard deduction to take into consideration some business expenses that were on prior returns calculated differently. But this essentially reduces your income that's taxable by 20%. So it's going to differ if your CWA net income is exactly the same as what you put on your tax return. You're going to have an additional 20% reduction to your adjusted income. Thus, you're going to owe less tax than the CWA had estimated. The CWA doesn't allow for it. You have to file a tax return. And then the benefit is you get an additional amount back. So the 30% withholding is held against the tax due on the tax return. So if you had $10,000 in withholding and you file the tax return and you have an additional 20% reduction to your net income, and let's say it produces a tax bill on the tax return of $8,000, well, you already paid $10,000. So the $10,000 is held against the $8,000 and you are due a check of $2,000. Or they'll pay to a US-based bank account, which means you need to sign up for WISE. It's pretty much, unless you have another US bank that has offered you a bank account in the US, you can't do a Canadian bank account that has a foreign currency account in US dollars, or an Australian bank account that has a BSB, an account number in Australia that's USD currency, the IRS will only send a refund to a US bank account in the US. And as far as I figured out, the only way to do that as a non-resident right now, without jumping through a million hoops, is to sign up for Wise. And I don't work for Wise. It's just very, very helpful. So if you're filing your taxes and you have a refund that's due and you're a non-resident and you can't cash a check, a lot of places don't cash checks now. You want to sign up for Wise, and on the tax return, you'll put your banking info, and the IRS should direct deposit any refund that's due to you. So you must remain tax compliant to be eligible for future CWAs. Let's say you go to the States for a couple of years and there wasn't withholding because promoters didn't do anything about it, and they just let it fly, or you got around it somehow, and then you didn't earn that much money and you just kind of forget about it and you don't file your taxes. 1, 2, 3 years goes by, or whatever, and then all of a sudden you get offered a big tour and you're like, I want a CWA. Well, you have to have filed your taxes for the prior 6 years, and they have to show on your tax transcript for the IRS to approve you for the CWA. If you haven't filed and those tax returns haven't processed, they're going to deny you. So you want to keep current, even if you didn't earn anything. I know Matthew from doing this talk for South by Southwest, and for artists who go to the South by Southwest who are going to the US for the first time and are making zero money. Though I recommend those artists to file a zero earning tax return, because the IRS, when they come back later and they apply for a CWA, will look online, they'll see that they played at South by Southwest, they'll look at Songkick, they'll look back, they have resources, and they do a search on every artist that applies for a CWA, and they'll see that 2 years ago you played South by Southwest. Well, where's the tax return? And the only way they know that you didn't make any money is to file a tax return and say, I didn't make any money. If you didn't file a tax return, they don't know. They just know that you came over and you essentially worked. And so that work had some sort of compensation, or if no compensation, the only evidence is a zero file tax return. So remain compliant, and then you're CWA eligible. So if you do not have a CWA, they're going to withhold 30%. As I said before, each promoter is going to do the withholding. They're going to eventually send you a 1042-S tax form. It's going to have a bunch of information that you've provided to them on a form W8-Ben. That information is not here. You'll cross that bridge when you get there. This is where it gets tricky, is a lot of the smaller promoters pass on the responsibility of filing the 1042-S forms to an intern in their office, so the forms don't necessarily get filled in correctly, or they read the information that you've provided on form W8-Ben incorrectly, and it gets mailed to a European address instead of a US address, because there's 2 spots where one is the artist's home address and one is the mailing address, and oftentimes they'll use the home address and not acknowledge the mailing address. So the artist is on tour and the tax form goes into the abyss of a prior residence that they had from the year before. Not having a CWA and leaving all this withholding to the promoters is feasible, but it's messy, and it's going to end up costing you more than the CWA is going to cost you to clean up that mess. Okay, so common misconceptions, right? People think that the CWA is a tax return. It's not. It's just a matter of the IRS reducing the 30% withholding that is required by tax law in the states of promoters and withholding agents like myself. So another thing people always try to do is they're like, oh, well, we'll just form a US-based LLC, and then if they pay the LLC, they're paying a US entity, and therefore we can get out of it. Some promoters might be fooled by that. But if they know you're coming from a foreign country and they've done the CWAs before, they know that the IRS look past any business structure that you've put between the promoter and the artist to the artist on stage as the beneficial earner of the income. So they look at the individuals for artist taxation. So you can't mitigate this by piping it through a US-based LLC or a corporation that you start. You can't mitigate it by paying it through to management who are based in the US when you're a band from Nigeria. You can't, I deal with a lot of French artists who have a third-party promoter, and that third-party promoter is paid all the revenue from the tour, but they also then pay all the expenses. And back in France, they wrap the tours together for the entire year, and then they have a deal where they pay out net income for the world to the artist. That's very complicated. The IRS don't care. They don't care that the promoter has taken the money, that there might be a loss on touring for the entire year. The IRS see the artist on stage, they're going to tax the artist. So when a CWA is filed, even though the business entity that's getting paid is this third-party promoter in France, the individuals in the band are listed on the CWA as the band, and the tax is withheld in those individuals' names. Let's see. So here's important notes, right? If you're paying tax in the US on the US income, you should not be paying tax on that same income in your home country. In your home country, you should be declaring worldwide income, including the US income. And then you say to the tax authority in your home country, when they give you a tax bill for all of your worldwide income, hey, wait, we pay tax on a portion of this income in the US. Well, based on the tax treaties that disallow double taxation or allow for non-double taxation, you can use what you paid in the States as a credit towards tax owed in your home country. It's essentially a coupon for a portion of your income having been earned in a foreign country and already been taxed. So your country at home should not be double taxing you if you've already paid income on or paid tax on that income in the States. It's important to note this because a lot of times artists will get the 30% tax and just sort of like not really know what to 30% withholding, not know what to do with it, not file a tax return, go home and then file their taxes in their home country. And the 30% is not the tax that you paid, it's just a withholding. It's not valid as a tax credit. So you've now got 30% withholding in America, and then you've got your tax paid on everything in your home country. In this instance, you've paid too much tax. You need to file your US tax return, get your refund, use your tax credit, and offset your tax in your home country. The application itself, deadlines are super important. So a CWA must be filed 45 days prior to the first show on a tour. So essentially you start the day before and then you count backwards 45 days. If you file any later than that, they're going to reject the application. You can refile the application for dates that are still 45 days out from when you're refiling. You want to file 2 months out. You want to have yourself together 2 months out and file in advance of that deadline so that the entire tour is covered. there is no there's no workaround here. Like if you don't file 45 days prior, the entire application could be rejected. Or if you realize you're not filing 45 days prior, then you need to chop off the first date or two of the tour and get as much of the tour on a CWA as possible. Those first shows are going to have 30% withholding. So you're going to end up with tax credits for the withholding on those few shows that don't make the CWA. You're going to have one tax credit for the 30% for the adjusted withholding on the shows that fall under the CWA. Forgive me, I know this is like a lot. I hope it's not mind-numbing. So this is kind of the end. In summary, 30% is a lot of withholding, and the CWA mitigates that. So it really behooves you, as I've mentioned, to file for a CWA. It's going to save you so much time and energy chasing tax forms from different promoters. It's going to free up cash flow. It's going to consolidate the reporting. It just makes life easier. Keep your taxes current in the US, and don't try to find a way around the CWA. You may, in fact, do that. I just consulted with an artist who's playing stadiums now. And for the past couple of years, they worked around it. And now they want to do a CWA because the IRS started to issue direct withholding letters. So on occasion, the IRS figures out that maybe the 30% wasn't getting done by some promoters. So they issue these letters to all the promoters, and the 30% is, it must happen, right? It's the IRS is saying to the promoters, you need to withhold 30% unless there's a CWA. Show us that you did this withholding. You need to send us the confirmation of the tax having been paid by this date using this form. Well, now they want a CWA. Well, now they have to go back and clean up the mess that they made from working around the issue. So you can get away with it, but it's going to bite you in the butt later on, assuming you want to keep coming back to the States and you're successful. And so I imagine someone can pass these slides on. Form 13930 is the CWA application. You can read more about it by downloading the form and reading the instructions if you want. And then there's frequently asked questions, which are from the IRS, which explain a lot of what I just said. They'll reiterate things that I just said at this link. So, okay, I hope everybody didn't bore you to death.
Lee, that was amazing. That was so much information. Holy cow. I feel like that was like a credit-worthy course in 30 minutes.
I hope it's not overwhelming. I mean, the basics of it are like, you can come to the States and pay 30% withholding and tie up a bunch of your money with the IRS and then fight to get it back and pay more than it costs to just do a CWA, have reduced withholding, have more cash flow, and still get a refund by filing a tax return.
Yeah, cool. That makes sense. I have a bunch of questions, but I want to make sure that we have time for our other presenters. So I'm going to switch over to them, let them run for a while, and then maybe we can dive into questions for all of that cover both Canada and the US after that presentation. So
I apologize if I went too long. I wasn't paying attention.
No, it's fine. It's all you were not rambling at all. It was just a ton of information that we needed to cover. So that's all good. Shall we move on? Carrie, Shauna, are you ready to roll?
Sure.
Okay. Lee, I think you got to get rid of the.
Yeah, I'm going to try and figure out how to do that. Stop share.
There we go. Perfect. Excellent.
We're kind of co-presenting. I'll just start off first and then we'll be back and forth. So, and we don't have any slides, but we do have some paperwork to send that's got a pretty good summary. My name is Carrie Clark. I'm a woman and I have brown curly hair, middle-aged woman, brown curly hair, and I'm wearing some kind of greenish thing with a necklace. and nothing underneath. I'm just kidding. Nothing from the bottom top down, no. And I'm at the Calgary Folk Music Festival, as was introduced. So just quickly, in a lot of ways, there's similarities, I think, from what I heard from Lee, in that basically, you know, when you come to Canada, you have to pay withholding taxes as a non-resident. And if you don't pay them, we have to withhold from you unless you have a waiver. And then there are other things Shauna will get into, where if you don't, yeah, she'll get into that. But basically, from the presenter side, we are required to withhold if we don't see a tax waiver that tells us we don't have to. Sometimes when someone applies, we find out we have to withhold a bit and we have to withhold that much. If you do not apply and we do not withhold, then the government comes after the organization or the presenter or the promoter, and we would have to pay later. And there have been organizations that have thousands and thousands in back taxes. And I can tell you it's very hard to get those from the artists. So we have to remit if you don't apply. And there's two kind of ways to apply. There's the long form and the shorter form. And for most American artists, you have a choice about the two of those, and we can get into that. We'll send you the links to the forms. You have to fill them out yourself. We do our best to advise you and help you, but A, it's none of our business how much you make. And B, we're not the experts on doing that. And we do have phone numbers of Revenue Canada to send you to, because sometimes the fine questions still have to go to them. And sometimes you find out different information from different ones, but that's sort of the whole big picture. And so, Sean, do you want to continue just with a bit of the information from our form and about the different options? And I can jump in, we can go back and forth a bit.
Sure. I'm Shauna Cooper. I'm a middle-aged Jewish woman with glasses and a black t-shirt and curly, longish hair. I would love to know where people are from. It would just help me, but so maybe in the chat, just throw in where you're from. I'm currently in Edmonton, Alberta, doing a 4-month contract with a festival here, but I work as an artist manager for American artists, so I have a lot of support on this stuff within the US because that's not my specialty. And I also tour non-Canadian artists in Canada. So if you're mostly American, then it's going to be a lot easier to do this because there's different rules for Americans and non-Americans in the Canadian tax withholding situation. Carrie sort of touched on, you have a choice of short or long form. So in 2017, I believe the Canadian revenue folks decided that if you're an artist coming to Canada and your revenue in one calendar year is less than 15,000 Canadian dollars, then you're eligible now for the short form R105, the simplified R105, which is super straightforward. If you're American, you fill it out. The intention is that you will not earn more than 15,000 Canadian in a year. If you go over, because you get booked for gigs later in the year that weren't on your calendar before, you can address that. But it's super simple. You fill it out, you send it to the promoter. So if you're earning 10,000 US for one gig and you want to come and play Carrie's festival, then you would fill out that form and you would be relieved of any tax withholding as long as it was approved. And Carrie would file it, or whoever the promoter is would file it. At the end of the year, you will be issued, regardless of whether you have a waiver or not, you're issued a T4ANR. Yeah, so a non-resident tax document. And much like what Lee was saying, like most of these are based on tax treaties. If you're from a country that's not, there's two kinds. There's a treaty-based one and there's an income and expense waiver. And that's where the difference comes in. If it's Canada, US, it's treaty-based. So you wouldn't be paying taxes twice. You would be, in a sense, it is about cash flow. So if you do go through with the withholdings, then you will claim it at the end and it'll be a credit towards your taxes in the US. If you are exempt from the withholdings, then you will claim your expenses as you would normally, and you may be taxed on some of that income in your home country as opposed to Canada. So it really is, it's a little bit of a shell game in terms of where that tax lands or whether you are responsible for paying taxes outside of the waiver. If you earn over $15,000 in a calendar year, you have to do the long form if you want to be eligible for a waiver. And in
Also,
order to go
sorry to
ahead.
interrupt you. The other thing is you can only do the short form if you are if you are a self-employed entity, not an LLC or not incorporated. You cannot apply for the short form. So you have to apply for the long form.
Right. And the other thing about the simplified version, that's actually a good thing to know, and this is completely kosher. I have done this. But because it's individual based, this is a lot of paperwork and a lot of headache. But if you had a 5-piece band, for instance, that was touring in Canada just for the summer, and each individual is eligible for that waiver up to $15,000. So if your manager is willing, or you are particularly savvy and you can convince all the promoters to do this, there's no reason why they shouldn't do it. But you can break up the payments. So you're actually eligible for $75,000 for 5 people, as long as no one individual is earning more than $15,000 Canadian per annum.
But there's a few caveats, because the only pain in the neck is if you're doing a whole bunch of dates in Canada, because the short form is, the simplified form is per individual in the band and it's per venue. Even if you're unincorporated and you're making less than 15,000, you may not decide that you want it. Say you're playing 5 gigs, you might not want to do each of the people do 5 different ones for each different gig, because it starts to be a pain in the neck.
Yeah, that's the onerous part, is you would have to figure out like you can have like one person paid for one gig, another person paid for another gig, another person paid for another gig, if you choose to do it that way. It's complicated, but it is feasible. You could do it that way. The alternative is that you do the long form tax waiver. And the first thing you have to do then is get a Canadian tax number. So you have to apply for an ITIN. And I believe, Carrie, is it advisable? How far in advance?
To apply for an ITN? I don't know. I mean, we're saying either way, you should. Yeah, I don't know. I think it's all 30 days in advance. The ITN is quite quick. The longer form, which we'll talk about, they suggest you apply 30 days in advance. The short form doesn't really matter as long as you get it into the promoter before they pay you any money. And that's one thing I think, sorry, we're jumping all over the place here, but when I did my sort of general intro, it may be obvious, but the withholding applies to both the deposit and the balance. And so if you want your deposit and you need it now to buy flights, but you haven't applied for a waiver, the promoter has to withhold on the deposit. If you apply and you get a waiver later, they don't have to necessarily withhold on the balance. But yeah, the short form, you can send it to the promoter whenever if you qualify, and then the promoter can pay you out, and the promoter keeps that, file. The long form, they suggest you apply 30 days in advance. And applying for the ITNs in advance as part of the long form, I don't think it takes that long. Sorry, that was a long answer to a short question.
And I'm not sure if we said this yet, but the withholding percentage in Canada for US artists is 15%. For non-US artists, it's 15% with the long form and 23% if you do the simplified one.
And how the simplified form works is basically you start off with your gross, and then any expenses, and your gross has to include revenues like costs of accommodation, things that are covered. But basically the simplified form, it starts with 15%, and then you start knocking it down by putting in the expenses. Is that not right, Shauna? We're going to disagree.
Only for non-American artists. American artists can't use the expense form because of the way the tax treaty works. So
Oh,
for American artists, you skip section 7 of the simplified. It's straight up. You don't have to do the 15% if you're doing the simplified. For non-Americans, you are allowed to use the expense form on the
Okay.
simplified, which is
and
section 7.
that's when it starts at 23%, and you can start to knock it down from there. With expenses, flights, agency fees, anything, any year kind of cost that it costs to be a touring artist.
Yeah, up to 10% for manager agent fee. It's new. It's 2020. I love that. Just checking if we've covered the simplified waiver. So you have to be an individual, earnings can't exceed 15,000, and you have to include expenses that were incurred on your behalf. And we have this sheet that Carrie and I will share afterwards that links to that form. It's super straightforward. If you are earning considerably more than $15,000 Canadian in a calendar year, then you go to the other process. So you have to get a Canadian tax identification, and then you do the R105 regular waiver.
And you just do one of these waivers for the entire band and for your entire tour. And you include all the dates that you're playing and the fees and different, your band names, all the information on it. It's just on one form. And you include all the dates you know of at the time. If you add any later, then you can update them.
And I think Carrie did say this before, but also just again, to reiterate that you also have to use this form if you are not being paid as an individual. So if you have an LLC, if you are incorporated, then you have to do the long form. Minimum of 30 days is the typical requirement to process it. And you have to submit it in the city of or the region of your first gig, because they will have to process it for you. Correct, Carrie?
Sorry, say that again. Oh,
They-
yeah. Generally, they suggest that you send it to the city of the first date on your tour. They don't ever turn it away. Like, for instance, if we have a good relationship with the Alberta folks and we've been talking to them, we'll say apply to that. So generally they're saying send it to the first place on the tour. And the promoter can tell you what that fax number is, but it's not, like I said, it's not a hard and fast rule where you get fined or something for sending it to another one.
Yeah, and we'll include the link to that one. Essentially, you include all your contracts. And for your ITIN to apply for your tax number, the thing that's probably the most onerous is getting a certified copy of your passport to do that. Otherwise, it's fairly straightforward also. And then your third choice is not to, and again, specific to Americans touring in Canada, you can just choose not to apply for a waiver and have withholdings. And much like the way Lee explained it, you won't be taxed twice. It'll apply to your filing in your home country as an expense or as a tax credit, depending on what country you are from. And then you actually have a choice as to whether or not you file your taxes in Canada based on whether it is advantageous to you. So if you had, for instance, if you filed for the long form waiver and after your expenses, there's still a chance you would be eligible for a refund. And then you could file in Canada and get a refund. But again, it depends what country, because based on tax treaties, you may actually be able to do that in your home country. That's a good question, Stephanie or Stacy. Sorry. Oh, Carrie answered you. Okay, good.
Although I don't necessarily know, so I'm not sure theater companies are the same, but if they are the same as bands and the company has put all of the different individual company members on, then they should be covered. But yeah, you might, and
Well,
that,
if the entity being paid, oh, go ahead.
We, like for our companies, and these are mostly non-US companies, we've been required to submit the Reg 105 for the company so they can get, so the presenter doesn't have to withhold, but then all of the individual performers and crew members also has to file Reg 105 so that the company paying them doesn't have to withhold tax for them. Which, I mean, we didn't used to do for
Canadian-based company.
years. Or this is a Korean company, also like our UK company. This year, we in like recent years, like we didn't used to do this years ago, but they've kind of started enforcing this the last 3-5 years. We've had to start doing these individual ones, but so I was just curious if there was a way that, it's always a pain because especially for our Korean company to get these certified passports, and the processes are different there, and it's just I got someone on my Buy Nothing group to help with it last time, but it was probably not legal. But I was wondering if they could do the simplified one so they can buy, not have to do the ITNs. But
If as individuals they're earning under $15,000 Canadian, all in, including any, again, travel or accommodation or food even that's provided for them. I think that would be fairly easy. It's also like the CRA is quite accessible if you want to call and ask them. It's a little bit easier to navigate than my experience with the IRS.
True.
Pardon?
True. Very true. The CRA picks up the phone, the IRS. Well, until recently, they were answering 3% of phone calls. So, and the people who answer the phone don't know what they're talking about. So CRA is like they're Canadian, so they're nice. And
oh yeah, that's
We don't
nice.
necessarily
up on
all
the
know what
first
they're
ring.
talking about either, unfortunately, but
they
they're
pick
more
up on the first ring, and they'll call you back. Like it's a different level of service.
Definitely, and definitely a fine question like that. It is a good idea to ask the Revenue Canada, and the phone number for Revenue Canada is within that form that they've linked to the Google form.
Can I ask one question that's kind of related to that with the individual folks? So I know that we found the hard way that the companies have to file their tax returns every year if they want to have those Reg 105s approved in the future and not be gone after for big fines for not filing, which is fine, they do. Do the individual performers also need to go through the trouble of filing Canadian tax returns if they've just toured, a couple of weeks here and there and have the Reg 105s?
They don't have to. If they're on the simplified waiver, in rare instances, the CRA will ask you to file, but it is very rare.
Okay, so it's not this, there's not the same responsibility for the individual team members who are part of a company to file annually or the years they perform.
I think it's my understanding that no, particularly if you're simplified.
Yeah, we haven't done simplified. We've just done the regular long form one, and they've always been approved eventually. But I haven't started chasing anybody to file their individual tax returns in Canada. And it hasn't been an issue yet, but.
I mean, I had a UK artist that toured in Canada on a fairly large tour. He did the long form I-10, filed taxes in Canada, filed taxes in the UK, and actually came out ahead. So there are instances where it's advantageous to do that. But I don't think you have to.
There's a question here, if I could jump in. Barry put a question in the chat. What about cases where the touring company is tax exempt in their home country, US or foreign? Is there a way to get the 15% withholding back? The waiver wasn't processed in time by filing return or something else after the fact. What do you?
Good question.
Feel that one?
Well, in a way, isn't it, Shauna, what you were talking about, and which we haven't covered as much, is essentially you can get, if you have a good accountant, you can get like Shauna sees it as a cash flow thing, like we have to withhold, but you should be able to get, see if you can talk about this, because I think this is related, Shauna, isn't it? What you were going to talk about?
Yeah, I mean, I tend to think about it with my American clients that it's just a way to have them have a tax credit towards the tax they are going to owe. So whether it's that Carrie's holding back 15% and remitting that when they play her festival, when tax time comes around, that's going to be a credit for them. So I'm not sure though where if the touring company is tax exempt in their home country, it would make sense that it would work that way, but I don't know what country and I don't know for sure.
I mean, we don't give, like, the Canadian government wouldn't give you your 15% tax back, but you could file in your own home country. Is that correct?
Yeah, if it's treaty based, then it's going to be a credit on your taxes in the country that you're originating in. If it's income expense based, then essentially it would be an expense. But if it's in a country where you're generally tax exempt, I don't know how that would work. I don't know how you would recover it.
Well, I'm sorry. Hey, I'm going to interject real quick, if that's okay. I just read through the tax treaty. There is a provision in the tax treaty for exempt organizations. It's Article 21. It talks about paragraph 5 for the purpose of United States taxation, contributions by a citizen or resident of the United States to an organization, which is, it goes into this. So if you have an exemption for the tax treaty, where there was tax withheld during a tax year, you can typically file a tax return and take the exemption on the tax return and receive a refund.
Okay. And you think the same would be applicable in Canada?
Yeah, it's this is the tax treaty between US and Canada that I'm referencing. Okay. So it goes both ways.
That's excellent to know.
That's always the go-to is the tax treaty. Yeah, I mean, it's tricky because of the sort of artist entertainment clause, but then the exemption clause for charitable groups, exempt organizations. So there's a conversation to be had with who's ever putting on the show, who would be responsible for the withholding, be it in the US or on the Canadian side. But if there is withholding and you are truly exempt, you should be able to file for the exemption on the tax return, and any tax that was withheld would be refunded.
Okay. And Francesca just said that that if you're using the long form, that you have to file a Canadian tax return. And I need to research that again. But I believe you.
Yeah, and it's right from the website, so that's good.
Yeah.
And the tax treaty,
okay, so I was wrong, and this is recorded. I was mistaken. You do have to file.
That's okay, Shauna. It's okay. It has been corrected. The record has been corrected, so that's all.
Okay, good.
We're all good.
Carrie, what else do you got? Anything?
I don't know if I have a lot else. Yeah, I don't think I have a lot else, to be honest. I'm not up on the tax treaty like Lee is. You just read it before you go to bed, Lee?
I've gone through it a bunch. I mean, I guess I've been doing this for 10 years and everybody has tried to find a way around it. So I'm constantly working with agents who introduce me to business managers or managers or artists who think that they've got a way around it. And so, or have questions about how this all works. And everybody's got a different setup. So the tax treaty is the ultimate reference.
Totally, it's great. Yeah.
I like to read the tax treaties.
We've got about 8 minutes left. So I just want to make it, just if anybody has other questions, if Lee and Carrie and Shauna, if you have questions that like the ones we were talking about before the session about the interrelationship between the two laws that we haven't touched on yet. Now's the time to loft those in there. This is a good time for those crazy detailed questions.
Well, something I wanted to say, which is kind of in the pre-conversation leading up to this, which is that the US and Canada look at artist taxation differently. In the US, and I said this earlier, they look past the business entity to the individuals on stage as the beneficial earner of the income. So the artists themselves get taxed. Doesn't matter what business structure that they have in place. It all flows through to an individual tax return. In Canada, it can be either. So it's been said that you can apply for these reductions on an individual level, but you can also apply for the reductions to a corporation or partnership or whatever kind of business structure you might have. And then that tax credit is taken towards that business entity in the home country. It's not the same with the US. What happens too oftentimes is a lot of Canadian promoters are looking for tax information for Canadian tax forms, and they're asking for the US tax forms just to get that information. And then because it's different taxation basis in the States, the information that goes on the Canadian tax statement, which is a T4, I believe, ends up being incorrect. And it muddles the situation. So just remember, these are two different countries. They deal with tax differently. The US looks at the individual past all the business entities, and Canada can go both ways.
One note though on that is sometimes we've had artists who are American and they have a Canadian agent and they try and say that they don't have to pay taxes, that we just pay the agent or the representative in Canada, and they think they can get around the taxes, and they keep trying this. And there's a particular agent in PEI that keeps trying to pull this, and all the information we get, like, everyone's shaking their heads because all the information we get is like, we're hiring the artist, we're not hiring the agent, and it's the artists we're paying the fee to. So if anyone thinks they can do that little workaround, they can't.
Yeah, the same thing happens in the States, and agencies, like some of the bigger agencies, have figured out that once, so if a promoter doesn't do the withholding and they pay it through to the US agent, the responsibility of withholding just passes on to the next person. So that PDI person might then, I don't know if it's the same in Canada, but they may actually be responsible for the withholding because they receive the money and then they're paying out someone who's non-resident. So as much as it's the same thing happens in the States, if a promoter doesn't withhold, it passes to the agent. If the agent passes it through to the artist without withholding the tax, the agent might be responsible for that withholding.
I want to just do a little side comment here, which is not directly pertaining to this, but a lot of the big agencies are really afraid of getting involved with the visa process for their artists, because they believe that if they get involved with the visa process, they have to be involved with the tax process too. And because of the kinds of thing like Lee, you're talking about in the US, where they look through whatever kinds of machinations you come up with to actually who's the beneficiary. Because that's the way it works in taxes, they assume that somehow the same thing is going to affect them. Like, well, if we sign on as the petitioner for this artist, then we're going to be the ones on the hook, even though we're not actually involved with the payment of the artist. And that's not the case. There's kind of a firewall between the immigration enforcement and the tax enforcement. I'm just mentioning that just because there's a lot of confusion, and it leads a lot of agents to not actually make choices which are the best for their artists in terms of their immigration choices. That's an aside. That was a detour.
Matt, this came.
Question here.
Yeah.
Someone put it in the chat, but it's very much on my mind as well. We really need a list of CPAs who do central withholding agreements in the US, Most of us have been, I'm delighted to meet you, Lee, and I hope we can get your contact information if you're looking for more clients. But this is a major concern. I work with a lot of international artists. I cannot do these CWAs. I've done them and I'm over it. Like, this is not my job. I can't do it. But to find somebody who can do it at an affordable rate has been a huge issue this past year in particular. So I underscore what Jimena Alviar said here. They're looking for CWA withholding agents. If we could have somewhere, I don't know if APAP can do this, but it would be great to have a place we can go as a reference. Your download of your slides, Lee, which were very helpful and concise. Be great to have that to refer people to. And also lists of people who do these CWAs. I've talked with at least half a dozen CPAs and none of them did CWAs. I'm trying to.
Can I explain the reason?
Yeah.
Can I explain the reasoning behind that real quick?
Yeah.
First off, you don't need to be a CPA to do a CWA. I'm not a CPA. There is a huge liability involved in the CWA process, which is that when I sign the contract along with the artist and the IRS, I am the designated withholding agent. That means I have to pay the tax through to the IRS. So when the contract says that the artist owes $400,000 in tax, which I work with an artist who owed $400,000 in tax, I'm responsible for paying that. If I don't pay it, I lose my right to apply for future CWAs, and they could come after me for that tax. So there's a really good reason why CPAs don't want to do this. Not many people want to do this. It's a huge liability. That artist that owed that much tax, I work with them on a day-to-day level as their business managers. So I have, I can pay from their accounts. It's a different situation. When I work with artists, I have an artist that just did Red Rocks, and they owed a chunk of tax. And before I sign off on the CWA, I require that the deposit is made into my escrow account of all the tax that is owed on the contract. So I have that money in hand before the tax is due. Otherwise, I won't sign it. So I heard affordable. It's not affordable. It's a huge liability for the people who are signing off on this. So it unfortunately is somewhat expensive to deal with, but the benefits of having the CWA are way beyond the cost of doing it, if that makes sense.
It makes sense in a certain way, but it also means that there are some tours that won't happen because they can't afford to hire somebody to file the CWA for them. And I think that this is a real concern for the field. These are artists that should be able to tour here. They're not making enough money to owe taxes, yet 30% gets withheld, which cuts into the possibility of the tour budget. I mean, it's a huge problem. And I would really like us as a field to find out ways of addressing that and making it more amenable for these artists.
To interject again, they were experimenting with a short form for a couple of years, where if you were going to be earning, each individual is going to be earning less than $10,000, you could apply using the short form, and it did not have the same liability issue that the full CWA contract has. I don't know why, but that program stopped. I think it stopped because it was only open to a few people, and at the same time that they open up this test reduced CWA, they also limited people who could apply to a CWA to people only earning over $10,000 per person as an artist, which then made it impossible for some artists to even get a CWA. So it was like, it's the IRS being messy. And then
actually,
go
what happened with that, Lee, what happened with that was they put the limit, the $20,000 or $10,000 limit on the CWA
Yeah.
that you can make above a certain amount in order to be able to do it.
Yeah.
We worked with the National Endowment for the Arts and League of American Orchestras to propose to the IRS the short form version of it.
Yep.
Which, much to our surprise, they were like, "Oh, okay, we'll do that." They introduced it, and then there was a problem with it was running for a number of months, and there was some problem with the form, and so they took it down, and then in order to temporarily solve the problem, because we'd convinced them that was a major impediment to the sector, they removed the limit on the CWA, and apparently have just decided to not fix the form and just stick with got rid of the limit on it. But what was interesting about that was it did make it clear that the IRS, at least at the time, was receptive to the sector in terms of the advocacy that we were doing. And I think if we came up with a better idea, they might be receptive to that. But so Allison, I think your idea, there may be room for an APAP-led working group to talk about what might be a better solution to this, whether it's somehow figuring out a way to indemnify the agent, the withholding agent against losses or insurance or something like that. There may be a way to do this in an affordable fashion. Guys, we are 5 minutes over. This has been the easiest session to moderate. I've just sort of sat back and let the experts talk, which has been lovely. We could probably keep on going, but I think we should wrap it up. So Lee, Shauna, Carrie, thank you so much for sharing your expertise with us. Krista, thank you so much for giving us the opportunity, and all the good folks at APAP for letting us do this. Boo, thanks for organizing all this and making it happen. For our interpreters, thank you for the work you've done today. Really appreciate it. And stay tuned for future sessions coming from APAP coming up in the coming months. Is there anything, Krista, that I need to touch on before we sign off?
Please fill out the survey to let us know how you found this and other topics that you feel are important that we need to put on the docket for the next couple of months. Thank you all for a really, really informative session.
Thank you.
Take care, everybody.